Hi everyone, it's Melinda Jennison from Streamline Property Buyers, and today I've prepared another Brisbane property market update for you, which will summarise all of the latest data for the month of April 2025 across Greater Brisbane. We're going to start with listing volumes. Now, total listing volumes over the last 3 months here in Brisbane have been declining month on month, but so have new listings, and that's the number of new opportunities that are listed for sale just within the last 30 days. This is in contrast to many other capital city markets where we've seen that listing trend increase, that is more properties coming to the market. So Brisbane does hold some unique characteristics when it comes to the volume of properties available for sale right now. We also know that over the last 12 months, sales volumes here in Brisbane have been declining very slightly, only negative 0.5% change over the last 12 months. So this tells us that demand's remained relatively constant throughout that 12-month period at a time where supply has actually been reduced. Now, in terms of the buyer demand, it is still strong, especially for quality properties throughout the city. Looking at auction clearance rates, you can see the trend that's been occurring from February through to March and then April. Now, here in Brisbane in April, we obviously had 2 weeks of school holidays. That definitely dampened the market activity. Following that, we had a third long weekend where we had Labor Day, which occurs on the first Monday in May. So in actual fact, we had 3 long weekends, and this really does stall both seller and buyer activity in the real estate market. So those auction clearance rates already throughout the first couple of weeks of May have actually increased, and we'll see that reflected in May data. Days on market for Brisbane were at 26 days at the end of April. So last month, that's the end of March, that was sitting at 22 days. So slightly longer days on market. 12 months ago, this was 16 days. So this tells us that it's not as urgent to buy some properties across the city, but of course, demand is relative to the buyer depth in certain segments of the market and for certain product types, because we're still seeing some properties sell much faster than others, and that's why local knowledge becomes critical and important. Dwelling values across all of Greater Brisbane increased 0.4% throughout the month of April. So this was in line with some of the best performing capital city markets. But in saying that, Hobart had 0.9% growth and Darwin 1.1% growth. So we saw a surge in activity throughout the month in those two cities. When we're looking at PropTrack data, it also showed the same trend in that Brisbane property values increased over the month. We're not now in growth territory that's significant month on month, but we're definitely creeping up in values. Let's have a look at the segmentation, because this really does tell the story in terms of which segments of the market are growing at various rates. So the lowest 25% of property values here in Greater Brisbane have been shifting at the fastest rate of growth, and that's 2% over the last quarter in the 3 months up to the end of April. Whereas the top 25% of property values, so the most expensive segment of the market, has only shifted 0.2% across the same period of time. Remember, this is dwellings data, so you must overlay what's happening in unit and house markets within each location to get a much better understanding of how this is trending. One thing I will note is that quite often as interest rates drop, the top end of the market recovers very quickly. We are already seeing that trend happen in Sydney over the last 3 months, where you can see there that the highest 25% of property values have shifted at a much faster rate than the middle segment of the market and the more affordable end of the market. When we look at the 12-month comparison in terms of dwelling value changes, you can see there Brisbane still performing as one of the top 3 capital city markets over the annual or the 12-month period. Our growth has been 7.8%, behind Adelaide at 9.8% and also Perth at 10%. Now, what's really shifted is the changes just in the last 3 months. So you can see here just what's changed throughout the capital city markets. Darwin has surged ahead in terms of growth, whereas Sydney, Melbourne, Brisbane have really maintained a relatively consistent level of growth. Adelaide and Perth have slowed down more than Brisbane. So when we're extrapolating that 12-month data into the last quarter, Brisbane's actually retained more growth than the other cities that have performed best over the last 12-month period. We'll be watching with interest how this unfolds in the months ahead, simply due to supply and demand metrics across different capital city markets. Now, of course, house values, we like to break down the data into house and unit value changes. Over the last month throughout April, house values increased in Brisbane by 0.4%. Annually, this equates to 6.8% growth over the last 12 months. This is totality data, and if people don't understand that as a term, this is formerly CoreLogic. They've just had a name change over the last month. So Brisbane's actually performing on par with Sydney and Perth in terms of monthly growth, but still ahead in terms of that annual growth of Sydney and Melbourne, and also behind Adelaide and Perth. Looking at the PropTrack data, it also shows that house prices have increased in line with the CoreLogic or the totality data. So the same monthly positive growth trend has been observed in that data set as well. Looking at unit values now, the totality data has showed that Brisbane unit values have grown 0.5% throughout the month of April. So this is slightly slower growth in the unit market compared to last month, but you can see there that units in Brisbane really are performing much better than units in the likes of Sydney and Melbourne. And on an annual basis, we've seen really strong growth in the Brisbane unit market, 12.8%, and compare that to the much lower rate of growth in the house segment. This is really important for people to understand where the demand has shifted to more recently, and it's now reflected in a median unit value of $698,000. We expect that to push that $700,000 threshold over the next month as the unit market continues to grow. PropTrack data has also shown that Brisbane units increased throughout the month of April, so the same positive price growth trend has been observed across both data sets. Looking at the changes in property values in each segment of the market on a month-by-month basis from 2020 all the way through to 2025, you can see that pattern of price change that occurred significantly off the back of COVID, where the dark blue lines show more significant growth, that is growth in the house segment of the market than in the unit market, which is the light blue segment. However, more recently, you can see certainly in the last 12 months, we've seen the unit market outperform the house market. When interest rates were increasing, we also saw the house market values, median values, drop more significantly than the unit market. So this is why over the last 2 years, we've seen the unit market outperform performance in the house market here in Brisbane. And it's certainly applicable or relative to the fact that the new supply in the attached dwelling market is really constrained in the city. Looking at 12-month value changes, this is the totality or CoreLogic data. You can see there the performance of both houses and units in different capital cities around Australia. So we've got Brisbane performing extremely well in the unit segment of the market, second only behind Perth, and in the house market, third behind both Adelaide and Perth. And certainly Brisbane, Adelaide and Perth have been the three capital city markets that have outperformed across all dwelling segments over the last 12 months. Looking at the 3-month changes, you can see Darwin has surged ahead, especially in house price changes. Brisbane's unit values are still performing relatively well, as are Perth's unit values, but the house market has certainly slowed down. Growth is still positive in both segments of the market when we look at the last 3 months. Now let's look at vacancy rates across the city. So throughout the month of throughout the month of April, we saw vacancy rates drop to 0.8%. That's increased just recently to 1% once again. So everything is tracking below 1% at the moment in Brisbane. Very tight vacancy, and we're not seeing a high volume of properties become available for rent. Now, what that typically translates to is rental price growth. Now, in the housing segment of Brisbane's market, we've seen rent prices increase 3% over the last 12 months, whereas in the unit segment of the market, rents have increased 4.3% over the last 12 months. So there's definitely more upward pressure on rents in the attached dwelling market than there is in the detached dwelling market. And it's one of the reasons why we have seen investors in Brisbane look to units for stronger rental price appreciation and also stronger gross yields. In summary, looking at Brisbane, dwelling values have increased 0.4%, which is the same as it was last month. So consistent dwelling price growth, although when we break that down into the house market and the unit market, we've seen house price growth re-accelerate and unit price growth slow down slightly over the last month. Now, this is due to the underlying strength of our local market. There is low supply based on listing volumes and still consistent demand that's enough to ensure price growth is still happening, although at a more moderate pace. Unlike most capital city markets, Brisbane's unit market is outperforming houses. This is in contrast to other capital city markets around Australia, and it is due to the local supply of units being really constrained, and it's very unaffordable for builders to bring that product to the market right now. With another rate cut expected this month, we certainly believe that buyer interest is sitting on the sidelines and it's about to gear up for the right opportunities once again. Whilst there's still been a moderate level of demand in the market, we do expect that that will pick up again, especially once those interest rate cuts come through. In terms of affordability, some segments of the market are still affordable for Brisbane people as well as interstate investors looking for options that are going to provide a higher yield. There's obviously lifestyle appeal and there's steady population growth. And these things are actually setting the stage for ongoing price appreciation in the future. If you would like to get in touch with our team at Streamline Property Buyers, feel free to connect with us. You can scan this QR code. That will take you to a lot of free resources that will help you on your property buying journey here in Brisbane. It allows you to download and subscribe to our podcast, or also if you are looking for professional assistance in your property buying journey, you can book a call with our Streamline Property Buyers team. Thank you so much for your time today, and bye for now.